Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Nvidia tumbles into correction territory, shedding $430 billion in value since Thursday. It is the biggest three-day value loss for any company in history. A victory for bank bosses. The Fed floats a weaker version of its bank capital overhaul that would significantly lighten the load on Wall Street lenders. Plus, Airbus cuts its earnings and delivery goals for the year as supply chain issues continue to hit the European plane maker. Let's check in on these markets then with the Nvidia story front and centre for us, of course, and raising questions as to whether or not this will lead to a broader sell-off or indeed maybe a buy-the-dip opportunity. So far, Asian markets showing relative resilience. European futures, though, pointing to losses of 0.3%, but they started the week strongly with gains of 0.7% yesterday, led by banks and the auto sector. It was technology, the only sector in the red yesterday in the European session. The FTSE 100 is pointing to very modest gains of 0.1%. The S&P futures looking to build on gains, a little up 0.1%, I should say, of the sell-off of yesterday, looking to add 0.1%. Nasdaq futures pointing to gains of around 50 points, looking up by 0.2%. We've been hearing from Mary Daly, by the way, from the San Francisco Fed, of course, a member of the FOMC and a voting member. And she's been talking about the labour market of the US potentially at an inflection point. Take a listen.
So far, the adjustments in the labour market have been modest, not really pushing up the unemployment rate. But we're getting nearer to a point where the outcomes on employment may be less benign.
Mary Daly also saying that restrained demand will likely be needed to return inflation to the Fed's 2% goal. Markets still pricing in 2 cuts by the Fed. The FOMC in the minutes, of course, suggesting 1 cut will come through. Markets pricing in around 48 basis points by the end of the year. Let's check in cross asset in terms of how things are playing out across different FX with euro-dollar in focus and the US 10-year as well. Relatively resilient, unchanged in the session today, holding at around this 423 level on the US benchmark 10-year. 107 on euro-dollar, a little bit of strength coming through. Dollar weakness is certainly a factor there. The euro gaining 0.1%, the pound at 126 and Brent trading at $86 a barrel. Let's cross over to Singapore, check in on the Asian markets. Avril Hong standing by. Avril.
Yeah, Tom, we're seeing not that bad a picture emerging in this part of the world on equities. And this is considering the Nvidia-led sell-off in tech overnight, especially what we saw on Wall Street. The declines are still being seen among the chip stocks. So they are the drags on CSI 300 and the TAIEX. But on the Hang Seng, you can see it's managing to clock gains. And this is amid this rotation, I think, from growth into value. We're also seeing the consumer tech names, the Meituans, Tencents, those are the ones that are helping to prop up the Hong Kong benchmark. And I think even one trader pointed out that it seems like traders are moving away from chip stocks, semiconductors. They're selling that and moving into pretty much everything else. The Nikkei is outperforming today. Flip the board because that has implications from what we're seeing in the Japanese currency. The yen is still weak, even though it's recovering some lost ground. And this is against a softer dollar. It is still hovering near those 34-year lows. And some traders even think 170, not 160, is the next level to watch in the absence of anything to keep the downward momentum in check. Verbal warnings from Japanese authorities hasn't quite helped. That's going to have implications as well for the offshore yuan. These two highly correlated. If we see it pop above 170 on the yen, we could be looking at 730 on the offshore yuan. Today, we got the PBOC coming through with a weaker than expected fix. It might be taking the opportunity from the softer dollar to set things a bit weaker on the Chinese currency. Let's flip the board and take a look at some of the stocks that are in particular focus today. Toyota is one that is a big boost on the Asia stock gauge, which is, by the way, gaining for the first time in 4 sessions. But these are the chip names that are really coming under pressure. Infotech is the sector that is the big decliner today, Tom.
OK, well, we'll get more on the tech space now. Avril Hong, thank you very much indeed, joining us out of Singapore with a check on the Asian markets. As I said, staying on the tech space with a particular lens, of course, on what's been happening with Nvidia, entering then correction territory with a sell-off erasing an historic amount of value. The 3-day drop wiping about $430 billion from the chip maker's market cap. For the details, let's bring in Bloomberg's Annabelle Drewlers in Hong Kong. Annabelle, what was behind this drop then?
Yeah, well, it's certainly something that a lot of different investors and analysts are looking at, Tom, and there's really quite a few different reasons that are being suggested as well. A lot of them point to the technicals here. So, for instance, some of our colleagues have been looking at the impact of things like triple witching, the role of expiring options. You've got possible portfolio realignment as well, because we're June 25 today, so you could have that quarter-end rebalancing coming into it. There's the RSI itself above 70 for Nvidia for at least a month. So that would tell us it's overbought. They're more of the technicals. Then you've also just got the success of Nvidia itself, because it's vaulted past the likes of, or it did vault past the likes of Microsoft, Apple. These are companies that are much more established, have a much broader business as well. Simple profit taking, because you've even seen the likes of Jensen Huang, for instance, selling shares along the way. So a lot of different reasons for this. But the big question, of course, is what happens next?
Indeed. And what are investors, Annabelle, going to be watching for, do you think, in the hours and days ahead for Nvidia?
I think one of the things that a lot of people are really pointing to, and indeed just out of those reasons I cited, none of those factors for the sell-off of Nvidia points to something that's fundamentally wrong with the company. So it does seem perhaps that we'd need to see some sort of serious earnings miss or a protracted economic slump to see Nvidia under pressure for too long. But that said, there are still, of course, the technical models that we like to apply in these situations, and one of those is the Fibonacci retracement. And if you were to take a look at that, you would see that the next line in the sand for Nvidia, or support level, would be the $115 mark per share. So right now we're around 118. Could we get to 100? If we do get to 100, that's the next support level you can see there. Crossing below that would mean you're eyeing off the likes of $100 per share. So really, Tom, as you say, big question. Is it the next move up, higher, or, of course, lower possibly?
OK, Bloomberg's Annabelle Drewlers on what is happening, transpiring, of course, for Nvidia, a stock that we continue, of course, to keep a clear focus on, and we will keep across that story for you as we lead up, of course, to the Open in the US. Annabelle, breaking it down for us, thank you very much indeed, out of Hong Kong. Now, to the macro, at least when it comes to the banking space and some changes potentially around the regulatory front when it comes to Wall Street banks. The Fed is said to have shown other US regulators possible changes to its bank capital overhaul that would significantly lighten the load on Wall Street lenders. Let's get more then from Bloomberg's Kriti Gupta, of course, anchor at the Markets Today show. Kriti, thanks for joining us on this. Is this a victory for Wall Street bosses then?
This is a victory for Wall Street. This is a victory for Jamie Dimon, who led the charge on these lobbying efforts, because, of course, we know when this was first introduced, Elizabeth Warren, who's very tough on all things corporate, was very, very pushy, strong, vocal about making sure that these capital buffers existed. A lot of this came in the fallout of the Silicon Valley Bank kind of crisis. The idea here is that, are we seeing a GFC 2.0? We obviously have not since then, but that was where a lot of this concern has come from. As the economy has rallied, as banks have shown they're not only able to weather the storm, but are actually more resilient than they were even 2 or 3 years ago, simply as a function of how much they've grown and how much volatility the market has seen since, with 2 wars, with the pandemic, with a very aggressive hiking cycle around the world. Banks have really proven that they can catch up to this. So for a lot of people, this is going to be bringing down the cap from 16% in capital buffers down to just 5%. At least those are the proposed rules, according to Bloomberg reporting.
Yeah, so that 16% to 5% is considerable, isn't it? What does it mean in terms of where are we? When do these rules come into place? There's wrangling between the different regulators, I understand. What kind of time frame are we looking at? And do we expect further opposition from the likes of Senator Warren?
We may still see some further opposition. So this is not a done deal at all, to your point, that there is still some wrangling involved. But you can see how it sets the tone, not just for what's happening in the states, and especially ahead of the election as well. Remember, as banks have less capital buffers, they can lend more. There's more liquidity in the market. That, with various ripple effects, has a broader positive economic effect. So you're looking at 2 Fed-appointed officials, for example, or 2 officials on the Federal Reserve who are known as Republican nominees, who are still saying, look, this is a positive. This is a really big boon for the economy. And it's not just the American economy, it's the European one as well, because look at the precedent it's now set for Basel III, for example, and this idea here that if the U.S. banks don't have to hold on to these reserve ratios, their reserve ratios are coming down, their capital buffers are coming down, Europeans having to hold more would only set them behind. That's one narrative in the market that's pushing further against these Basel III regulations.
Really interesting in terms of the potential read across for European banks. Kriti Gupta, of course, anchor the Markets Today show, breaking down what we've been hearing in terms of the potential regulatory changes and a potential lobbying win, at least for the big CEOs, the big banks on Wall Street. Here's what else to be thinking about then today, this Tuesday. We're going to get a number of speakers from the European Central Bank on a big week in terms of the inflation data, of course, out of a number of major economies across the Eurozone. So at 10 a.m., you're going to get the UK, at 10 a.m. UK time, I should say, the ECB's Stornaras will be speaking, something of a dove on the ECB. We'll see what he has to say about how thinking is evolving around the ECB's next steps. And at 1:15 p.m. UK time, the ECB's Makhlouf will be speaking, as well as Nagel at 6:15 p.m. UK time on the more hawkish spectrum. So a number of ECB speakers that should, we hope, give more clarity in terms of the thinking that is evolving amongst the ECB on a big week, as I said, from the inflation data of the Eurozone. 3 p.m. UK time, we're also going to get the Conference Board Consumer Confidence Index and survey coming through from the US, suggestions it may soften a bit. We've seen retail sales coming a little bit softer than some of the estimates. The consumer, it seems, losing a bit of steam in the US. We'll see if that narrative is underscored with that index later today, 3 p.m, as we said, in the UK. And then at 12 a.m. UK time, we're going to get some Fed speak. Michelle Bowman's going to be speaking on monetary policy, bank capital reform, and at 5 p.m. UK time, the Fed's Lisa Cook will speak on the economic outlook as well. So a number of ECB speakers and Fed speakers to put on your agenda this Tuesday. You can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DAYB Go. Coming up, why the UK Prime Minister is invoking his Conservative predecessor as he attacks the opposition Labour Party's tax policies. The latest on the UK election is next. Plus, we're going to talk to the CEO of Rasmussen Global on why the French elections have some EU leaders worried about defence. That is later this hour. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Let's turn to next week's UK general election. Yes, it is just over a week ago. The Prime Minister, Rishi Sunak, and opposition Labour leader Keir Starmer have traded stark warnings about each other's plans on the economy. Let's get more then from Bloomberg's Lizzie Burden. As I say, just over a week to go until that election. 10 days to go until the election. Can the PM, Lizzie, do anything to turn the tide, to turn the fortune for him and his party?
Well, we're getting closer, but that poll gap just does not seem to be budging. It's about a 20-point lead Labour's got at the moment. And you and I were speaking to the former Chancellor Philip Hammond yesterday. I thought it was interesting where he said it wasn't really about winning, it's more about trying to prevent the Conservatives becoming a rump in opposition and limiting the defeat. He also said that the Tory betting scandal, Gamblegate, is similar to Partygate. But Tom, what I think so curious about this election and where we're at the moment is that there's so little detail on the fiscal side. The Institute for Fiscal Studies says that the UK voting public is in a knowledge vacuum because no one is really addressing the fiscal constraints, the stark choice between higher taxes, spending cuts and more borrowing. And the Office for Budget Responsibility has this forecast that you're going to have about 0.5% growth a year to solve the problems fiscally, but the IFS saying even that's unlikely. More likely is the Bank of England's outlook, which would leave a £30 billion fiscal black hole. And how do you solve that when the Conservatives and Labour are in what the IFS calls a tax lock arms race, where neither party wants to raise any of the three main rates of tax?
Yeah, the IFS damning of both parties and their manifestos, and both parties taking issue with that assessment. Did we get any clarity on those issues from the business secretary and the shadow business secretary? We hosted the debate here at Bloomberg yesterday. Did anything come through on that front from them?
Well, unsurprisingly, in front of an audience of business leaders, no one wanted to say that they were going to raise tax. It was interesting that Kemi Badenoch, who's the front-runner to take over the Conservative Party post-election, didn't rule out a leadership bid. And actually, I think the irony is that it's that speculation about who's going to take over the Conservative Party Party that's led to so much instability. And actually, you talk about policy clarity. Jonathan Reynolds, her opposite number who was debating her, what he did promise was stability and little more, really, when it came to the detail. Neither party, as I say, is talking about raising the three main levers of tax. Labour didn't want to either say that they would rejoin the single market or the customs union. You could not have found an audience that would be more welcoming of that idea. What he did say was that there would be closer ties with Europe. Take a listen to what he did say.
We're not going to give away our negotiating hand entirely, but we believe when we've got... Look, the argument on food and agricultural products is this. Do you want lower standards than the European Union? If you don't want lower standards, surely we remove, pragmatically, some of those checks and balances to make sure we can have as close a relationship as is possible to remove some of those costs. There will still be costs because we're not going to talk about going back into a customs union. So we accept that. But where we can make it better, in any trading relationship, we should always be seeking to make it the smoothest, easiest relationship it can be, and where we've got those comparable standards, there's a basis for negotiation.
This is what they think is the problem, that if you just have Labour people instead of Tory people, then the EU will like them and everything will be okay. This is not a serious diagnosis of the problem.
Maybe they have a different red line around the ECJ.
Well, this is the thing. What would they have to give up in order to get that? That is the question that they don't want to answer. You cannot allow any kind of oversight from the ECJ. That's not something that you should be keeping in your back pocket. That's something that you need to be honest about with the British public.
I think you see the problem here, which is this is a conversation on one side, on the Conservative side, which is all about, to be frank, the next leadership election in the Conservative Party and the red lines within there. Yeah. For people who just want a pragmatic, better, good faith, reasonable relationship with the European Union or any other trading market, unencumbered by some of that politics, Labour's just a much more practical, pragmatic.
So really interesting that Jonathan Reynolds did not rule out giving up ECJ oversight and also saying we're not going to give away our negotiating hand, quite a similar stance to the way they talk about the unions and negotiating over strikes, and also saying when circumstances change, plans change. So huge elephants in the room. What's going to happen after the election? A big question mark.
OK, Lizzie Burden, our UK correspondent, unpicking, of course, what we heard in that debate, the business debate that took place here at the Bloomberg headquarters, and, of course, where we stand on this election. So we count down, of course, to that July the 4th vote. More on the electoral politics, of course, and how this is evolving now, and a focus on what is happening with the Green Party. The UK's Green Party says investing in renewables could help tackle the soaring cost of living. The Greens are putting forward a plan to hike public spending funded by income taxes on high earners and a new wealth tax. Co-leader Adrian Ramsey spoke to Bloomberg's Guy Johnson.
The cost of not acting on the climate crisis is much bigger than the cost of acting. But in terms of business opportunities, and I work in the renewable energy sector for homes and buildings, but you could equally say the same about electric vehicles, about public transport, about farmers producing more food within the UK so we're more resilient. In all those sectors, if we give those industries the confidence to invest, to grow, to have a clear direction from government, then the opportunities in that green transition for jobs and for business and for reducing the root causes of the cost of living crisis, they're enormous opportunities. People do want to protect their green spaces, whether that's in our towns and cities or in the countryside, and the homes that are being built at the moment aren't actually meeting people's need. It's often luxury executive homes that are built without people getting the investment they need into local infrastructure and local services to go alongside those homes. So we need to be building communities, not just building houses. And then in terms of the investment that's needed in the transition to a green economy, the capital investment in things like public transport, insulating our homes, renewable energy, we would be willing to do some borrowing for that. As we're on course for a Labour government with a big majority, having a group of Greens there will be able to push them to be bolder, both on climate action and on the funding to restore our public services.
The co-leader of the UK's Green Party, Adrian Ramsey, there, outlining his party's vision to Bloomberg's Guy Johnson. Coming up, WikiLeaks founder Julian Assange is freed to leave the UK, ending an almost 15-year battle over his prosecution. We take a look at the details next. This is Bloomberg.
I think it doesn't make sense to just say, okay, I'm just going to go into India or go into China or go into emerging markets. You got to look global. And of course, yes, emerging countries are growing faster than the developed countries. No question about that. It's double the growth rate. So therefore, there's going to be more opportunities in the emerging countries, but there's so many companies listed in New York and London and other developed markets where the companies are actually emerging market companies because their earnings are from the emerging countries like India, China, Brazil, and other countries like that. So we've got to widen our scope if we want to be good investors.
So I'm wondering, what is the argument, or what's the best case you can make against U.S. exceptionalism? That, you know, that there is a case to be made to be long EMs and simply not just leave your money and close your eyes and wait, say on an S&P 500 ETF, for example.
As I mentioned, the S&P 500 now contains so many companies that are benefiting from the growth in emerging countries. So you've got to be aware of the fact that when you buy Apple, you are buying not the U.S. market only, but you're buying China, India, et cetera, et cetera. So these countries are enabling the American companies, the multinational companies, to earn greater and greater profits. And therefore their stock reflects that.
So this, your Mobius Emerging Opportunities Fund that's about to come online, are you saying that, you know, everything is fair game? So a company like Apple, which you correctly point out, you're effectively buying an EM stock if you think about it longer term, because increasingly their pie is China, India. Tesla is another one, for example. Would the S&P 500 companies, or would stocks in the U.S. be part of your eligible investment universe?
Yes, definitely. Yes, there's no question about that. And don't forget ADRs. Lots of ADRs are listed more and more. You're going to see emerging market companies listed in New York because of liquidity.
Mark Mobius, chairman of the Mobius Emerging Opportunities Fund, speaking with our colleague David Inglis. Now to some other stories making the news this Tuesday. China has suggested that Germany's luxury car manufacturers could benefit if Berlin convinces the European Union to drop tariffs on Chinese EV exports. Bloomberg has learned that Beijing floated lowering its existing tariffs on large engine cars in return for scrapping planned EV levies on imports from China. Beijing currently imposes a 15% fee on passenger vehicles from the bloc. The proposal comes just weeks after the EU put forward a tariff hike of as much as 48% on Chinese electric cars. WikiLeaks founder Julian Assange has been freed after 5 years in a British prison as part of a plea deal with the US. Sources say he will plead guilty to leaking US national security secrets and be sentenced to time already served in the UK, allowing him to return to his native Australia. The US has pursued Assange since his website published thousands of leaked military documents in 2010. Coming up, we're going to talk to the CEO of Rasmussen Global on why a shift in France's balance of power could risk European military spending and support for Ukraine. That is up next. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Nvidia tumbles into correction territory, shedding $430 billion in value since Thursday. It is the biggest three-day value loss for any company in history. A victory for bank bosses. The Fed floats a weaker version of its bank capital overhaul that would significantly lighten the load on Wall Street lenders. Plus, Airbus cuts its earnings and delivery goals for the year as supply chain issues continue to hit the European plane maker. The markets right now digesting the moves then, of course, across the tech space, Nvidia and semiconductors in focus. Is the Nvidia drop a sign of broader weakness across these markets? Asian markets and the Asian session suggests that maybe not. There is resilience in the Asian markets. The session today relatively strong, and in fact US futures are pointing to the upside as well. European stocks though pointing lower by 0.3% after the gains that came through for European stocks yesterday, led by autos, led by the banks. In terms of the FTSE 100, you're looking at a flat session so far, according to the futures. S&P futures pointing to gains of 0.1% after the losses of yesterday. Nasdaq futures looking to add 53 points. The Nasdaq dropped a little over 1% with the weight of Nvidia central to that move. Let's flip the board and look cross-asset. 423 the last time I checked on the US 10-year, the benchmark currently still at those levels, unmoved so far in the session. We've been hearing, of course, from Fed speakers, including Mary Daly, talking about a potential inflection point in the labour market of the US. Other Fed speakers coming through later today, and of course you have inflation data out of the US on Friday that could be consequential. Markets still pricing in close to 2 cuts by the Fed by the end of this year. 107 on euro dollar, bit of dollar weakness coming through, lifting some of these major currencies. The euro getting a lift on the back of that, up 0.1%. The pound also getting a bit of a lift at 126, close to 127 on the pound versus the US dollar. $86 a barrel on Brent, up 0.1% on oil. Let's go now to the political risk, and the political risk out of France, of course, with how things are shaping up in that country. As we count down to the vote, of course, at the weekend, French President Emmanuel Macron says, quote, extreme parties in the upcoming election could spark a, quote, civil war. Speaking on the Generation Do It Yourself podcast, he said the far-right national rally referred to people of a religion or an origin in their security plan. Macron also accused the far left, France Unbowed grouping, of peddling sectarian politics.
Ce choix, il s'est imposé.
This choice was imposed. Did it make me happy? The answer is no. On June 9th, if there was anyone it hurt, it was me. If we follow your reasoning to the end, the country explodes or there is civil war. Did we do everything right? No. After 7 years, don't people want to kick you in the butt? Yes.
Les gens, ils ont pas envie de vous mettre un coup de pied aux fesses? Oui.
Macron trails both Marine Le Pen's national rally and the leftist New Popular Front in opinion polls. French political turmoil has some EU capitals worried that military spending, meanwhile, could fall by the wayside. There are also concerns that President Macron's snap poll gamble could put fresh support for Ukraine in jeopardy. For some analysis on this subject then, very pleased to say we're joined now by Fabrice Pothier, the CEO of political consultancy firm Rasmussen Global and former policy chief at NATO. Very well positioned to comment and give analysis on this subject then. Fabrice, should we get a significant number of seats in Parliament for the National Rally? Should we get a National Rally Premier or Prime Minister in France? Would French support that's been pretty ironclad for Ukraine be questioned?
First, I would challenge a bit the premise of your question. I don't think France's support for Ukraine has been ironclad. I think President Macron has come around only, I would say, over the past year in having a much stronger stance against Russia and much more positive towards Ukraine. Before that, we had this phone diplomacy, which actually was getting at odds with the rest of the allies. So, yes, France matters. France is a major European military power. But actually, if you look at the numbers, France is not delivering more than Lithuania. So with all respect for Lithuania, I think France is punching still below its weight. So yes, it would be an upset politically, symbolically, if France were to withdraw its support for Ukraine, but it will not be a major blow as if, for example, Germany were to withdraw its support.
Well, that's really important context in terms of the French support for Ukraine and the fact that, as you say, your analysis is that they're still punching below their weight. Do you take them at their word, National Rally? Do you trust them when they say they've moderated their position, of course, on Russia? They've moderated their position on Ukraine. Can we trust them on that?
I think it's a bit of a Meloni way of presenting things, meaning there might be a core. There is most probably a core in the Rassemblement National that is very pro-Russia and very anti-Ukraine. But politically and I would say tactically, they're making the choice of watering this down and trying to stay not too far from the mainstream. Not exactly in the mainstream. They are still voicing some criticism and their differences, but not as far as it could cost them too many votes. So I think they're applying the Meloni recipe here, hoping that it will get them enough votes from the mainstream.
Okay, so that's on the national rally. And of course, Macron's party still polling in third place behind the leftist grouping as well. So polls suggesting that you will get a political jamming up of the system, essentially, across the French parliament, and that pushing through a policy agenda will be that much more difficult, given the political arithmetic. What that mean in terms of practical support, military funding, and funding for the economy of Ukraine? Does it just dry up in that scenario?
This is when you get into the Fifth Republic Constitution and how the executive can take some executive decisions without necessarily getting the parliament to vote or giving the parliament a say. Generally, under the French Fifth Republic system, the executive has a great say on matters of national security and foreign policy. Of course, here the problem is the executive might be split between a president, Macron, that is supporting Ukraine, and a prime minister and the rest of the government that is more Ukraine skeptic or neutral in the best case scenario. So here will be, I would say, a real battle as to who can get away with what in terms of decisions. Macron will be able at a high level strategic forum to be able to obviously voice France's message and position on Ukraine. But when it comes to money, when it comes to practical support, he will need the government to follow. And this is where there might be a tension in the system, and there might be some real difficulties in getting France to follow through its commitments that it just made a few months ago in this France-Ukraine bilateral security agreements.
Fabrice, what is all of this doing for France's international relations?
Well, obviously, that's the big irony of President Macron's kind of crazy scientist experiment by calling for snap elections. He's made restoring France's status and putting France in a leadership role on the international scene. He's made that one of the main, I would say, objectives of his mandates over the past 7 years. And yet, his very decision on calling for snap election is putting this at a great risk. Because what is happening already now, we're already seeing that in Brussels, is France diminishing both reputation but also influence. Both in the numbers of members of the European Parliament, for example, he managed to secure for the European elections, but also in his capacity to basically carry the other member states, both the EU member states, but also the NATO member states. So this is going to diminish France's capacity to carry the others and to play a leadership role, certainly.
Fabrice, before we let you go, given that you've worked for two NATO Secretary Generals, your view on the appointment of Mark Rutte to lead up that organisation, is it a positive for NATO?
Well, what is positive is NATO is maintaining the tradition that it created when Anders Fogh Rasmussen was appointed, of having a former head of government as head of NATO. And this is important, especially in an era of strong men, of a possible return of President Trump, not to have a defense of foreign minister, but a former prime minister who can sit down with the NATO leaders. That's one thing. Second, Mark Rutte is a pragmatic coalition builder. He will need a lot of that because NATO is very much about coalition building permanently with its 32 members. And I think Mark Rutte has a form of dialogue with President Trump, at least he had when he was President Trump was at the White House, which might allow him to be able to channel him and to keep the US in and to keep the US support as active as it's needed.
Valuable insights, smart analysis. Fabrice Pothier, thank you very much indeed. Former NATO policy chief and CEO of political consultancy firm Rasmussen Global. Coming up, Airbus cuts its guidance as supply chain snags continue to bite. We bring you more on the clouds gathering around the European playmakers' outlook. That is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, Airbus has cut its guidance and aircraft delivery goal for this year on supply chain snags. The company will hand over 770 aircraft instead of 800. Joining me now is our global aviation editorial leader, Benny Camel. And Benny, the importance of this is not just one corporate, not just one company, but this tells a story of a sector. This is a sector story and the challenges being faced. What have Airbus been saying and what stands out to you from what we heard post the market yesterday from the CEO?
Good morning. So, yeah, it was a pretty sort of comprehensive revision of their guidance. You mentioned the 770 plane deliveries versus the 800 previously anticipated, but they really sort of threw in the kitchen sink yesterday. We've got a reduction in cash for the outlook. We have a reduction in the operating profit. We have a reduction also in their longer-term production rates on the all-important A320 plane. So really Airbus taking a deep look into its numbers and realizing they can't achieve what they'd hoped for. And this is just about at the halfway mark of the year. So fairly early on, normally, you know, Airbus, when they have cut, and this doesn't happen often, but when they have cut, this is usually fairly late and they've always seemed fairly confident that they can make it. But this is at the halfway mark. So things can't be looking very good for them when they're already this pessimistic at this point in the year. It's really across the line for them. It's not a demand issue. So this isn't that people aren't buying their products. It's a supply issue. They can't get the products to make their planes. We're talking about engines. We're talking about aerostructures. We're talking about cabin interiors. All that stuff is missing, and therefore they can't build the planes at the rate that they'd like to.
And it also means, of course, that they're unable to fill the gap, arguably, at least to some extent, that's been left by Boeing as it faces those security issues. Talking of which, there's some detail coming through in terms of Boeing and a new offer, at least a revised offer, it seems, for Spirit Aerosystems. And this also talks to the supply chain constraints for that company.
Absolutely. So Spirit is an interesting company. They are principally a supplier to Boeing, but they also supply components to Airbus. And we heard a couple of months ago that Boeing wants to buy Spirit back, gain control of that asset again, given the crisis that they're in. And untangling that asset is very complicated. You don't want some of the parts that go to Airbus to land in the Boeing camp. So the companies have been picking that apart for the last couple of months. What we're hearing now is that they are sort of on the home stretch, on the finishing line. We might get a deal in the next couple of days, this week maybe even. Remember, next week is a national holiday in the US, so things will probably slow down then. So they're trying to get that over the line. We're hearing that there's a small premium baked into this, about $35. This is a fairly distressed company, Spirit that is, so you know they can't be too wishful in what they can get in terms of money. So $35 is the money that's sort of on the table, and we might get an agreement in the next couple of days. But as I said, very complex to take that apart and make sure that all the bits end up with the two main manufacturers where they should be.
OK, Benny Camel, our global aviation editorial lead, joining us out of Berlin. Thank you very much indeed on the details, of course, around the Airbus downgrade and the Boeing offer for Spirit and how that could evolve. Now to some other stories making news this Tuesday. Novo Nordisk plans to invest $4.1 billion in another US factory, ploughing more money into its biggest market amid rising discontent there over the cost of its obesity and diabetes drugs. The project in North Carolina will double the company's production footprint in the US, adding manufacturing space where Novo's medicines will be filled into injector pens and prepared for consumers. The Danish drug maker says the facility will create 1,000 jobs. Covestro said it's entering formal talks with ADNOC on a potential takeover that could value the German chemical company at about 11.7 billion euros. The Middle Eastern energy giant indicated to Covestro it's considering a potential offer of 62 euros per share, subject to confirmatory due diligence. A final deal would represent ADNOC's biggest ever acquisition. And traders are warning the Japanese yen could weaken to its lowest level against the US dollar in nearly 40 years. Some asset managers told Bloomberg the yen could soon trade at 170 per dollar. On Monday, Japan's vice finance minister said authorities are ready to intervene 24 hours a day to prevent wild fluctuations. Bloomberg M-Live strategist Ven Ram joins us from Dubai. And Ven, you have warned long for a while that the pressure on the yen will continue because of the rate differential. Is there anything around intervention that can put a floor under this currency? Why the views now on 170?
Good Good morning, Tom. I think that the markets are kind of like round numbers. So 170 is the next big round number. So they're pivoting towards that. But I think that, the story is much more nuanced. Yes, the yen has been let down by inflation-adjusted rate differentials against the US dollar. And those differentials have widened this quarter considerably. And what is curious is to look at, Tom, is that, much of this weakness in the yen before this quarter was driven solely by inflation-adjusted rate differentials in the US rising much more than anything in Japan was going on. But now you see that the yen side of the equation is also weakening. So the weakening is mandated, is well warranted, but 170 is a bit of a stretch. I think that, a lot has to go wrong from here for it to go to 170. And I think that, we have heard recently that the finance ministry officials are standing by round the clock to defend the yen. So I think that there is going to be a fair bit of resistance around 160, and a lot has to go wrong for it to go further down. But there is quite a bit of speculative momentum against the yen. There's no question about it.
Okay, we all like round numbers, Ven. Okay, so 170 looks like a bit of a stretch. Draw the lines then, Ven, from the yen in Japan to the yuan in China. Does weaker yen mean the PBOC has to let that currency, their currency, ease further in terms of that export competition? What are the implications for the PBOC and the Ministry of Finance over in China?
Absolutely. They need to let the yuan weaken, not only in correlation and in sympathy with what's happening with the yen, as you mentioned, but also independently because of what's happening with the Chinese economy. If you look at the economy, pretty much, all the pillars that are supporting the economy are crumbling. If you look at the jobs market, youth unemployment is soaring. If you look at exports, they've been sputtering of late. If you look at inflation, China doesn't really have any inflation to speak of. They're in deflationary mode. They're exporting deflation to the rest of the world. So there's a lot there are a lot of structural challenges that China is beset with, and they need to address those challenges. So more than ever before, China needs its exports to fire up, and for them to do that, they need the yuan to weaken considerably. If you look at the onshore yuan relative to the PBOC's fixing, the yuan is weaker by almost 2%, much more than the fixing. That is the outer limit of what the PBOC allows the currency to trade in. So that kind of suggests that sentiment is kind of brittle, and investors are expecting the yuan will need to weaken much more to accommodate the economy, because the domestic consumption cylinder is just not firing. So they need the export cylinder to work, and for that to work, they need a weaker yuan.
Ven, just very briefly before we let you go, the Bloomberg dollar index is down 0.1% in the session today. What is leading to the modest softness in the greenback in today's session?
I think that there is a bit of profit taking that's going on because we are into the end of the quarter, and there is quarter end rebalancing. So there's a lot of portfolio rebalancing that is taking place in bonds and in stocks, and therefore there is a bit of churn in currencies, which is reflective of what's happening in stocks and bonds.
Ben Ram, Bloomberg's M-Live strategist on the yen, the yuan and the dollar. Thank you very much indeed, always with the analysis across the FX space and the implications for the broader markets as well. There's plenty more coming up. We're going to break down the moves in Nvidia and look ahead to consumer confidence, that data crossing out of the US later today. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. We've been talking, of course, about the slide in Nvidia shares over the last 3 trading days. Again, in terms of market cap, this is the biggest 3-day loss of market value for a publicly listed company on record. Back below 3 trillion in terms of total market cap, at around 2.9 trillion. It's back below Microsoft, back below Apple. And again, it's in correction territory. There's a couple of reasons being flagged for this, particularly coming through from our M-Live team, whether it's the options expiry that came through at the end of play on Friday, insider sales as well, by the way. Chief executives, the CEO, the CFO and others have been selling about $700 million US dollars of shares so far this year. The stock was also firmly in overbought territory for a little over a month, above 70 on the 14-day RSI. Still, the stock is up, as you can see, about 140% year to date. But does this spell a broader slowdown in terms of these markets, or indeed is this a buy the dip opportunity for those looking to get exposure to this maker, of course, of AI accelerators? In terms of, let's flip the board and look at the market cap and how things have gone wrong. For those exposed to one leveraged ETF, it's called the Granite Shares 2x Long Nvidia Daily ETF, and oops, there was inflows of around $743 million into that ETF last week, and that fund has since fallen 25% because of the leverage, of course. It's still up around 330% year to date, but if you got exposure towards the end of last week, that's going to be painful. Another story to look ahead to. We've got, of course, a lot of data coming out of the US this week. We look ahead to the inflation data on Friday, but before we get there, we need to get a gauge on the consumer confidence. With the Conference Board consumer confidence reading coming through for the month of June, it's expected to soften slightly. This, of course, is key in terms of how you think about the moderation that's coming through for the US economy, and, of course, ties into the job story. Mary Daly of the San Francisco Fed talking about this inflection point potentially for the labour market of the US. What is all of that doing to US consumer confidence? We know retail sales, most recent data print came through slightly softer than estimates. So that could be important later today in terms of the gauge on the US consumer. There's plenty more coming up today. We're going to be speaking to the Barclays CEO, CS Venkatakrishnan, joining Bloomberg's Francine Lacroix for a fireside chat as part of the Sustainable Finance Forum from London Climate Action Week. Don't miss that interview live at 1:10 p.m. UK time today. Up next, though, it is Markets Today. Stay with us. This is Bloomberg.